There is this interesting concept of a realized price in Bitcoin. And in this video, we're going to look at various interesting charts around the realized price. It helps us give a picture around the current macro environment. And all of those charts have been taken from the Glassnode Insights newsletter. So the link to that newsletter is also in the video description. Now, what's the realized price? The realized price is this orange line over here, and it is derived from on-chain data. So we look at the blockchain of Bitcoin and we look at what specific price has a Bitcoin moved the last time. And so we look at all of those wallets, we average out the price, and what we then get from this is what's in aggregate the price people likely have acquired Bitcoin for. So in other words, when we zoom in here, when we look at this kind of a period, in aggregate, Bitcoin investors had been in losses. We look at the opposite, so the price is above the realized price, right? The market price is above the realized price. Black is above orange. Then in aggregate, Bitcoin investors are in profits. Now, this is a very long-term chart, starting in 2011, where Bitcoin was just a few cents, all the way to today. We can see the realized price barely goes down, right? Most of the time, it either goes sideways or it goes up, meaning people are excited when the price goes up. A lot of transactions happening, the realized price shooting up. When Bitcoin goes down, people tend to do nothing. They don't instantly sell. The realized price gets somewhat sideways. Now on this chart, we can see those bear markets quite nicely drawn out, right? These different cycles in Bitcoin. And what we see here in green are the periods where the market price has been below the realized price. So in aggregate, Bitcoin investors had been in the losses. Now, what's this orange area over here? It's the cumulative days of price below the realized price. In other words, it's an attempt to try to find out how long on average in a bear market are people in losses until Bitcoin recovers again. So in the very early days, 2012, we had been below the realized price for 157 days. Then we had been below for 300 days. The 2018 crash saw us coming below that realized price for 134 days, right? After the final capitulation from 6.5K to 3.5K. Then a very brief period during the Corona crash. And now, so far, we are a bit more than 1 month below that. Now, this analysis does not try to find out how low we can go in Bitcoin. It tries to find out how long we are going to be depressed. Or in other words, if you are dollar cost averaging into Bitcoin, if you are buying Bitcoin regularly, say every single month, how long are we likely going to see low prices like this? And so far, right, when we look at this, it's maybe roughly 4 months or so, right? 4 or 5 months. If we are not that depressed as during the Mt. Gox collapse, right? This was the collapse of the major exchange coupled with Silk Road, the major use case of Bitcoin. If we don't see something as catastrophic as 2014, 2015, then maybe we've got another 3 months or so at those levels to buy in cheaply. Now, of course, all of these statements, they are speculative. So that's why I want to also look at different kinds of models. Again, here we've got the realized price, but a different way to display this. So what they call here MVRV is the market value to realized value. So how much are Bitcoin holders in aggregate in profits or losses? When this is at 1, as seen here on the right y-axis, then in aggregate, people have doubled their money. If this is below 0, then people are in losses. And we can see losses, of course, look smaller than the gains because you can only lose up to 100%, but you can 3x, 4x, 5x your money if you're timing it right. So this is what we're currently looking at, right? If you're buying Bitcoin today, we're waiting for several years. It's unlikely that the price will even be lower. In the past, at least, if history is any indication, this looks quite an attractive time. But of course, it's hard to buy when everybody is screaming for a 15K, a 10K, a 5K Bitcoin. Based on this realized value that's not really a realistic price target, right? 6K would be over here. We would be way below the realized price. We've never fallen that much below what the aggregate of Bitcoin investors have paid for Bitcoin. And the reason why I think this is a pretty useful tool is because it's a nice reference point, right? Everybody that's investing into anything has a reference price. When you buy a property and you consider to sell it, you want to sell it for a profit. So the time and the price you bought it at has relevancy for how much you are willing to sell. And given that over the long term, Bitcoin tends to rise because Bitcoin is limited in supply, fiat is not, people are very reluctant to sell Bitcoin in the losses, meaning that realized value is a quite nice indication where potential flaws can be. Now here's another model. That's the delta price. That's the brown line over here, right? The very lowest line. And the delta price is the realized price minus the all-time average price. And we have seen before, right? We can fall below the realized price, but where could be a bottom? And that delta price historically was a quite nice bottom indicator. After the Mt. Gox crash, we have pretty much bottomed at that delta. When we further continue, the final capitulation of 2018 of that crypto winter was also at the delta price. For the Corona crash, we did not go down all the way to delta. Currently, the delta price is at 14K. So there is a possibility we fall that low. There is still quite a bit of time we can expect to be relatively low. I wouldn't bet the farm on going that low though, right? We are already relatively cheap in the grand scheme of things, and you definitely don't want to miss out, right? You don't want to be FOMOing in case we actually have already seen the bottom. So the way I see this delta price is not necessarily as a tool to wait for buying until we hit it, but rather as a reference of what kind of volatility you should expect when buying in today. Don't be panic selling in case you're buying now and you see 14K maybe in a month or two. It is in the realm of possibility. It is what happened in the past. So we have to be comfortable with some risk, with some kind of potential short-term downside. But the way I see this is I always look at this in terms of risk versus reward. And we're now buying in at a bit above 20K, then losing 6, 7, 8K because of a drop. I think this 7K potential loss versus the potential gain of say 40K or 50K in case we hit a new all-time high. That risk to reward, I think, is very attractive. Now here's another chart showing a bit of a different data point. So now we are not looking at the realized price. So we're not looking at when has a transaction occurred. We're looking at the exact opposite, the unrealized loss. And we are looking at this relative to the Bitcoin price. Okay, so how much have people been in losses that they didn't yet realize? And this, of course, is interesting. It shows us very, very high values when Bitcoin was still relatively small. In terms of market cap, the peak of the unrealized loss was less pronounced in 2019, was even lower during the Corona crash. Currently, we are roughly at Corona crash levels. So again, this shows we have seen worse in the past. Worse could happen, but we also might just turn around again, similar to Corona. Risk versus reward now is good. There is risk, but there is more reward. Before we jump into the long and short-term holder supply and profit and loss, let me quickly shill the like button. That would be appreciated if you like this video because it will help the channel grow. You might also consider subscribing in case you haven't yet, because I publish videos on this channel every single day. Now let's jump back to this chart. In blue, we've got the long-term holder profit. In red, we've got the short-term holder profit. So when we hit new all-time highs, then of course everybody is in profits, and the short-term holders are a quite large fraction of those people that are in the profits. When we are in a bear market, then it's pretty much only the long-term holders that are still in profit. Overall, right, at the bottom of the bear market after Mt. Gox, only a bit over 40% of Bitcoin investors had been in profit, pretty much all of them being long-term holders. So you can see how the short-term holders, they expand during a bull market and they contract during a bear market. And when there is no short-term holders in profits anymore, that's where we tend to see market bottoms. We can also see, this is indicated here by this white dashed line, that in terms of percentages, more and more long-term holders are in profits even in the trough of each of those bear markets. Currently, there's no hype, there's no short-term holder profit. All of the people in profits are long-term holders. So by this metric, it seems like we are already at the bottom. So different models, different data points come to slightly different results. So instead of looking at the profits, let's look at the losses. How many Bitcoin had been transferred, realizing a loss? And that would indicate some kind of capitulation, right? When a lot of Bitcoin is moved, even though no profit has been made in this long-term upwards trend, that would indicate that the short-term opportunists that don't really believe in the long term of Bitcoin have been flushed out of the market, leaving the strong diamond hands to take over and push the price up. And this, I think, is very interesting because here we are at historical heights. This is measured in terms of Bitcoin. So this is not US dollars. And we had never that many Bitcoin being moved at a loss. That's a very bullish sign in my opinion. You can see here the lunar collapse. That's the all-time high. But we can even see the subsequent sell-off was another very, very elevated value here. So that, in my opinion, indicates that we have seen quite a bit of a deleveraging. Quite a lot of people that wanted to sell have already sold. So let's look at this in relative terms, right? When we look at the transfer volume or at the realization of profit and of loss, what's actually the percentages of closed positions that made money versus that lost? And we can see when this is very low, or basically below the 50% line, then there's more realization of losses. When this is above 50%, then there's more realization of gains. And when a lot of people realize their losses, that's when the depression is at a maximum. That's when we need to buy. Now, according to this model, we have not yet seen the worst. So this would be in line with this chart, the delta price, where we might potentially see the 14K. It could also be an indication of, over all of those cycles, people lengthening their time horizons, because we can see that the realized loss or profit wasn't as low in the final capitulation of 2018 compared to the bottom of Mount Gox, right? So maybe this is also increasing somewhat. Maybe we don't even enter this green area anymore. People simply hold on to their losses and aren't willing to sell because they expect Bitcoin to recover again and they don't expect Bitcoin to go to zero. Another way to look at heated versus calm periods in Bitcoin is to look at the realized cap hodl waves. So now we are splitting up the different wallets based on how long they held the Bitcoin. So they realized the cap, they just did a transfer, but for how long did they actually hold that Bitcoin before they made that transfer? And we can see the short-term wallets that held Bitcoin for less than 3 months, they dominate the transfers, the realization, right? They're very high during price peaks. When this is high, the price tends to be high. When this is low, there's not a lot of short-term speculation, not a lot of short-term wallet activity, then we tend to be quite low in the price. Currently, we are again at a comparatively low level. We are entering this in a similar way how we are entering being below the realized price. So we're just starting with very, very depressed prices, indicating now is the time to buy really heavily. Looking at the exact opposite, so at the wallets that hold Bitcoin for at least 6 months, right? So from 6 months to 10 years, we see this tends to be pretty high during bear markets. Again, we're pretty high. So that's good for Bitcoin. This is simply just the inverse of that chart, right? Look at this. These charts, they're simply just inverted to one another. You want to be buying when all the short-term speculation, when all the hype is flushed out of the market. And that's what's currently the state according to Onchain data. Now, in case you've got Telegram, you might consider joining the Bitcoin Strategy channel. Simply search for Bitcoin Strategy channel within the Telegram app. There's also a premium membership. Check out thebitcoinstrategy.com. There's daily market updates around Bitcoin, around altcoins. You can ask me any questions. More information is in this video. Hope to see you in that video, and thanks for watching this one. Bye-bye.